Hello everyone, welcome to another live trading video with Optionables. So today we made a profit of around 81,000 and we will first start off with filling the Excel sheet, and I'll keep 7,000 as brokerage. So you can see that we are now more or less nearing to our target of 5%. Initially we started with 3% target for a month, and since we were able to achieve that, we pushed it to 5%, which means we have to achieve 12.5 lakh on a capital of 2.5 crores. So we need another 2,25,000 and hopefully we'll be achieving it in next week to come. So by this weekend, most probably we should be achieving this. So let's hope for the best. So now coming to the trade. So we'll quickly move on to Kite and we will open the charts and look at what exactly happened. You can see that today was a complete upside move. So we, as usual, took 3 trades, one around 9:45-10, second trade around 1 o'clock, and third trade around 2 o'clock. So we are going to discuss each one of them individually. So we also took trades in BankNifty today, but we are not going to combine everything because it is going to get confusing. So that's the reason we will look at one by one. So first trade was we took around 9:45-10 o'clock. So that is, we entered 15,600 calls as well as 15,500 puts. 15,600 calls and 15,500 puts. So both were trading around 85 rupees when we entered. So I'm going to tell each trade individually. So the first trade which we took in the morning, so that had 3 adjustments in total, 1 counter as well as 2 shifts. So now we are going to discuss what exactly happened. So we took the trade here, market consolidated for a while, and then the market started shooting up. As the market started shooting up, the stop loss for both was kept at 130 rupees, around 130 rupees. And as the market started shooting up, there was some imbalance in the premium. So one leg went to 105 rupees. Whereas the other leg, so the call leg went to 105 rupees, whereas the put leg came down to almost 60 rupees. So which means obviously there is some imbalance in the premium. When there is imbalance in the premium but the stop loss is not triggered, what adjustments do? You do a shift. So that's the reason we came from 15,500 PE to 15,550 PE, which was trading at almost 80 rupees. So this is at 105, this is at 80. So we did the first shift here. So that is first adjustment, that is shift number 1. So I hope you're clear why we did the shift, because the stop loss is not triggered and there is imbalance in the premium. So we had shorted both at 85 and 85. So next we are going to discuss about the second adjustment. So now what has happened, we have come to 15,550 PE. So this is trading at 105 and this is trading at almost 80 rupees. And you can see that the market consolidated for quite some time. So let me just write this again. It was trading at 105 rupees and market consolidated for quite some time before it actually started shooting up. So since market consolidated for quite some time, there was some good amount of decay, and this actually didn't trigger the stop loss immediately. So what happened? There was again some imbalance in the premium. This went to 120 rupees, whereas this came down to almost 70 rupees. Now, what do you do when there is imbalance in the premium? So not even 70, I think this came to around 65 rupees. When there is imbalance in the premium, your stop loss is not triggered. What is the adjustment you are going to do? You are going to do shift. So that's the reason we exited 15,550 PE, which we had entered, and we shifted to 15,600 PE. So we created a short straddle at 15,600 and that PE was trading around 80 rupees. So I hope you're clear with both the shifts which we did, because the stop loss was not triggered and there was imbalance in the premium. That's the reason we shifted from 15,500 to 550, 550 to 600. So now we have a short straddle at 600. So currently we have a short straddle which is trading 15,600 short straddle. Calls is trading around 120 and puts is trading around the range of 80 rupees. And obviously when the market moved so much, you can't expect the stop loss not to get triggered after this move. So obviously the stop loss got triggered. So when stop loss gets triggered, what is the adjustment you are going to do? You are going to take a counter trade. So we have PE trading at almost 70 rupees now. So what type of trade are you going to take in counter? You're going to look at a premium which is almost half of this. And we found 15,800 call option which was trading at the range of somewhere close to 35 to 40 rupees, and we took this as a counter trade. And after that there was no adjustments done in the morning trade which we took. So I'm going to explain one by one because it is going to get confusing. So because the market started heading upwards later, and there was absolutely no need to do any sort of adjustments because this was at around 40 rupees and this was at 70 rupees. When the market started shooting up, both of them found a perfect balance at around 50 rupees. So there was absolutely no need to do any sort of adjustment. So the second trade is what we take at 1 o'clock. So here only one adjustment was there, and that is one counter. So we entered 15,700 as well as 15,600, 15,700 calls and 15,600 puts. So when we made the entry, both were trading around the range of 75 to 80 rupees, and the stop loss was kept at almost 108. So we had kept this stop loss, and then what happened towards the end, so the stop loss didn't get triggered immediately. Towards the end, as we approached here, stop loss got triggered, and when the stop loss got triggered, we took a counter trade. So this PE was trading around the range of 60 when the stop loss actually got triggered, and we entered 15,800 CE again. So that was trading around the range of 45. So we entered this CE again. So this is the counter trade which we took for 1 o'clock trade. So this is our second trade, 1 o'clock trade, where we took a counter trade. So all of this is happening parallelly. It's not that if we had one position first and then we closed that and entered the second position. All of this is happening parallelly. So in the second trade which we entered at 1 o'clock, there was only one counter adjustment. So when this happened, right, when the market moved, so so violently, that's when we had gone to a loss of almost 1.3 lakh. But the thing is, we obviously adjusted, and again at 2 o'clock, we make our third entry, or our third trade, where we enter 15,700 short straddle. And here we do not do any adjustment, no adjustments at all. We leave this trade till the end, and what exactly happens is we would have gone to a loss of negative 1.3 lakh when the market actually shoots up due to counter trade and shift and some brilliant theta decay which happens. Even though markets is going up, there is some brilliant theta decay which happens, and net you end up all the way from negative 1.3 lakh to a positive of 80k. So here I have just explained you about the trades taken in Nifty. I have not exactly gone to the trades taken in BankNifty because it is going to get very confusing because all these positions are running parallelly. So we have three trades in Nifty running parallelly. We have almost three trades in BankNifty running parallelly. Again, we had taken BankNifty at 10 o'clock, 1 o'clock and 2 o'clock. So we have to keep monitoring each position separately. Even though there might be overlapping in positions, we have to keep monitoring each position separately because we have to keep track of what position has to be adjusted, for what a shift has to be done, for what a counter has to be taken. So it is quite hard, and that's the reason I am not going to confuse you with BankNifty. First trade, we did adjustment of 2 shifts and 1 counter. The second trade, what we did? Second trade, we just did 1 counter. So there was absolutely no shifts, just 1 counter. And finally, third trade, no adjustment. So we did some adjustments in BankNifty also as it triggered the stop loss. Again, we did counter as well as shifting. But the thing is, if we didn't do any adjustment today, since it was such a one-sided move, sorry for that, it was such a one-sided move. If we hadn't done any adjustment today, instead of 80,000, we would have ended with a profit of somewhere close to 3 lakh. So anyways, you adjusted and you ended with 80,000 profit instead of 3 lakh. So what is the point of adjusting? So the point is, if you remember, Friday was a complete V-shaped move, right? So Friday was a complete V-shaped move. It fell in the morning and came up. So Friday, if no adjustments were done, Friday we ended with a profit of 70,000. if no adjustments were done, we would have lost somewhere around 3.5 lakh, right? So 3.5 lakh of loss. And today, when we did the adjusting, we got 80k profit. If we hadn't done any adjustment, we would have made around 3.3 to 3.5 lakh. So we'll assume 3.5 lakh itself. So end of the day, what happened? Because of adjustment, we ended with a positive 150k or 1.5 lakh. If no adjustments were done, then it would be net zero. So on the days when there's a full one-sided move, adjustments are going to give you lesser profits. But on the days when there's a complete V-shaped moves, they're still going to give you profits. So end of the day, you can see with adjustments, you're much better off than not doing adjustment. So that is one thing I wanted to tell. So now we'll quickly see the video and we'll try to understand what exactly happened. So you can see in the live trade here, so I started recording little late. It's around 10:38, so you can already see that. And I have already made a shift. So as I told you, I had entered 15,600 as well as 15,500. I have already made a shift because there is imbalance in premium, and this is trading at 80 rupees, this is trading at 102 rupees, and this is at 60. So you can see that since there was imbalance in premium, I have made my first shift. So as we continue and imbalance increases, I also do my second shift. So you can see that even as we approach 12 o'clock, I am still holding on to the same position. So this is at 108, this is at 74, and I am holding on to the same position. And when the market starts shooting up and when stop loss is not triggered, that's when I do my second shift. Right. So here you can see that I have come out of 15,550 because this is trading at 68 rupees. This is at 120 rupees. So there is imbalance in premium here. So that's the reason I come out of 15,550 puts and I shift to 15,600 short straddle. So this is the first trade which we discussed. And after it hits the stop loss, I am going to take a counter at 15,800. So let me just finish off with this first trade, and then I'm going to show you the second trade so it doesn't get confusing, because position will start to get added from here. Right now it looks pretty simple, but positions will get complicated from here because we start adding. Right guys, you can see here 15,600 has triggered the stop loss at 130, right? That is 15,600 calls, as well as 15,600 puts is trading somewhere around 75 rupees. So I end up taking a counter trade at 15,800. So you can see that I am shorting 15,800 calls, and this will be trading around the range of 35 to 40 rupees. So here I enter this trade where it was trading around 38 rupees. So my break even is 38, and you can see that I have entered 15,800 calls. So now this is all the adjustments I do in the first trade. Now we will only focus on the 1 o'clock trade. So we will look at 1 o'clock trade from here itself. You can see that here you see 6,900 quantities, right? But the thing is 3,000 quantity from this is at 1 o'clock trade. As I told you, 1 o'clock trade, we had done a short strangle at 600 as well as 700. So you can see both is trading around the range of 75 and 78 rupees. So 15,600 puts and 15,700 calls. So both are trading around the range of 75 and 75. I had done a 3,000 quantity of short strangle here. So 3,000 quantity right over here. So this is the 1 o'clock trade. As I told you, positions will get overlap. We will have to keep track of them separately. So that is quite hard. So that's the reason I told I will show individually. In this 6,900 quantity, 3,900 is from morning trade, whereas another 3,000 quantity is of 1 o'clock trade. So now we will see what exactly happens. So as the market started shooting up, I told you we go to a loss of 1.3 lakh. So you can see here around 1 o'clock, we are at a loss of 1 lakh, and the market has started to shoot up. It is almost at 690. So I don't do any adjustments because I don't find this imbalance quite a lot, because this is at 70, this is at 90. One small down move, they are going to balance each other out quite well. So there is absolutely no need to do any sort of adjustment, and I am at a loss of almost 1.02 lakh. So we will also reach 1.3 lakh loss. So but the thing is, now I'll quickly move on and show when this actually triggers the stop loss. So I have also added 2 o'clock trade here, so the position has become little more complicated. So right over here, you can see that the stop loss has been triggered at 108. So we had 4,500 quantity sometime back, if you can recall. So let me just go 2 minutes back. So at this point, you can see that we had 4,500 quantity. So in this 4,500 quantity, 3,000 is from 1 p.m. trade and 1,500 is from 2 p.m. trade. So totally we have around 4,500 quantity, but this triggers the stop loss, and that's the reason we will end up having 1,500 quantity right over here. The stop loss has been triggered, and so you can see that we have actually come to a positive. In spite of a stop loss being hit, there is some very good amount of theta decay which has happened, and we have actually come to positive. And now you see that as we further move ahead in the trade, I have also taken the counter trade here. So I have also taken the counter trade, which is at 54 rupees now, and my PE leg is currently at 45 rupees. So I haven't done any shift. The PE leg is at 45 rupees and this is at 54 rupees. And actually I forgot to mention one thing. We do a final shift because you can see that both of these are counter legs. So both 800C, one is a counter leg taken in the morning, one is a counter leg taken at 1 o'clock trade. So both of these legs have become much higher than the PE leg. So that's the reason we shift from 600 PE towards 650 PE later on in the trade. And apart from that, you can see that we have 700 short straddle taken at 2 o'clock. So this is 2 o'clock trade. So now we will just see 2 o'clock trade, and no adjustments were done to this trade. 1,500 quantity here, 1,500 quantity here. So you can see here, I have made the shift towards 650 right over here. So from 15,600 I exit this and I have come towards 15,650. One thing again, why I told I won't be telling BankNifty and everything together is you can see the amount of positions what we have here. It is going to get quite complicated for you to follow these. So that's the reason I am only going to tell Nifty in this trade, and BankNifty also some adjustments were done, but mainly the trade was taken in Nifty. So at a point we were at a loss of almost 1,20,000 and now we have come to positive. And as I go ahead, around 223 we end up booking everything at a profit of somewhere close to 82,000. So you can see that I end up booking everything at a profit of 81,791. So this is how we took today's trade, and I hope you guys have liked the video today, and I'll be catching you soon in tomorrow's live trading session. Thank you so much for joining.